Hi guys, and welcome back to Simply Forex, the channel dedicated to you, the trader. We want you to be successful in the markets. So guys, I'm going to give you some gold every day. I'm going to let you know which currency pairs I'm looking to trade and which direction. And I'm also going to let you know which news that you must be aware of. So let's take a look at the chart and what I'm potentially going to trade today. Morning traders, how are you? I hope you had a great weekend. Today is Monday the 13th of June and we would love to hear from you guys. We'd love to hear how your trading's going. If you've got any questions or you need help with anything, then please leave a comment below the vid. Okay, so as always guys, we're going to look back at Friday's trades to start with. It was a really profitable day guys. We're also going to look at today's potential trades, and we're also going to look at the important news for today as well. Okay, so let's look back at Friday's trades. So we had three potential trades, and the first one was this was the Aussie dollar against the US dollar. And we were looking to short this pair, guys. Okay, so the reasons for shorting it were as follows. So it was clearly in a downtrend. Lower lows, lower highs, lower lows, lower highs, lower lows. And it came back up and retested this last high. Okay, so it's still in a downward trend, a downward structure, if this high holds. Okay, and then sure enough, we had a reaction at that level, and also we had this very bearish candle, which we were looking to take shorts from, which also broke this zone here. Okay, so we were just trying to short this market down to this blue line, and as you can see guys, that's exactly what happened. Okay, but let's see if we could get in on the trade on the H1. Okay, so let's take a look at the H1. So we had our grey zone mapped out, as you can see guys, and price didn't reach it. Okay, so yeah, price obviously, you can see, clearly didn't reach our grey zone. But if you remember from my analysis, I said we could trade the first bearish candlestick pattern. Because that daily candle was so bearish, we could trade the first bearish candlestick pattern on the H1. And for me guys, there was a couple of candles you could have entered on this. I would still like this candle to be a little bit more bearish and less of a wick at the end of the candle. But if not, I would say definitely this candle, as it engulfed the previous candle. Okay, so one of these two candles you could have entered on, but I prefer the second candle. All right, because like I say, it engulfed the green candle. Okay, so this told me sellers were in control. Okay, like I say guys, I'll always be very transparent. I didn't enter this trade because I had a better setup on the New Zealand dollar US dollar, which I will show you in a minute, but maybe some of you guys traded this. If you did, let me know, leave a comment. All right guys, but if you entered on one of these candles, you'd enter on the close, put your stop above here, and then first of all, take price back down to these lows here, where you would have got roughly a risk to reward of 1:1, and then let 20% run down to the blue line, which also happened pretty quickly, guys. We didn't have to wait too long for it to hit target. All right, guys, so this was a good trade, a profitable trade. Maybe you took this one. Please let me know if you did. Okay. All right, next trade was this. This was the New Zealand dollar against the US dollar. And this was the one I took, guys, So reasons we were shorting this market are as follows. So price, as I said, very similar to Aussie dollar, US dollar. They are highly correlated, but price was in a downtrend. Lower lows, lower highs, lower lows, lower highs, lower lows. And again, until this high is taken out, okay, which it isn't, then we are still in a downtrend. Okay, and then sure enough, price reacted at this zone. Okay, and it also, this area was key, but it broke that and we had this bearish candle form as well. Okay, so for all of those reasons, we was in a downward structure. We had a very bearish candle form. We were just trying to take price back down to this blue line or even this blue line, guys. Okay. And judging by this chart, guys, we zoom in a little bit. Yeah, we also have this candle form. So there's no reason why we can't come down to this blue line as well, guys. So if you're still in it for 20%, maybe keep it open, keep it running. All right, but let's look at H1 to see how we got in on this pair. And as I explained, guys, this gave me a better setup than the Aussie dollar US dollar. So I entered on this trade. For me, guys, a little bit aggressive, but I entered on this candle. Okay, this candle, I know it was a green candle, but it had a large enough wick that rejected this grey zone and closed below the grey zone. All right, so I entered on the close of this candle, put my stop above here. And also this pair had more room to move into than the Aussie dollar US dollar. So for all of these reasons, I took this pair instead. So like I say, guys, entered here, stop here, and then let 80% run down to these lows. Okay, this gave me a risk to reward of roughly 1:2. So it was a great trade, guys. And then I let 20% run. Okay, I didn't close any at the blue zone. The blue line, so I've just let 20% run, guys. Okay, because it was such an aggressive move downwards, and if you look at the H4 candle, everything told me to keep 20% open and let it run. All right, but guys, I hope you took this trade. It was a great trade. Yeah, give us a great risk to reward, a nice entry, and I'm still in this trade 20%. If you didn't enter on this candle, guys, I would argue you could have entered on this candle as well. Okay, this tells me sellers are in control as well. There's a large red body and very little wick. But again, you would just put your entry here and put your stop above here. But this would still give you enough risk to reward back to here. Okay, let me know which candle you entered on. And just to look at the H4, guys. So yeah, this H4 candle, guys, this just told me to stay in the trade. It's broke these lows, very bearish, followed by another very bearish candle. Yeah, so I'm leaving my 20% to run. But we will see today. All right, guys, but yeah, great trade. Hope you took that one. Next trade idea was this. This was the Canadian dollar against the Swiss franc. Okay, so the reasons for shorting this were as follows. So price was clearly in an uptrend, higher highs, higher lows, higher highs, higher lows, higher highs. But then this low was broken. Okay, as soon as this low is broken, the structure is in a downtrend. We're looking for shorts. All right, and then price comes all the way back up and tests the last high. Okay, yeah, test the last high, and we have a very bearish candle fall. So for all of those reasons, guys, I was looking to short this market, potentially down to this blue line, even back to these lows, guys. Okay, but let's look at H1 to see what happens with this pair. I really wanted to trade this pair, guys, but I just didn't get the candlestick pattern set up. Okay, so as you can see, guys, price come into our grey zone. And we did have a bit of Canadian dollar new, which sort of kept me out of the trade. Okay, but yeah, none of these candles tell me sellers have taken control. Yeah, this one doesn't. Yeah, if anything, that tells me it wants to push upwards. This one doesn't. But eventually, you could argue this candle does. If not, definitely the next candle. All right, but I was not trading at this point, guys. Yeah, I had finished trading. And I had gone out, to be quite honest. But yeah, this candle here, I think would have been a reasonable entry candle. Yeah, put your enter at the close of this, put your stop above here, and you would still be in this trade 100%, looking to take profit here. Okay, but like I said, guys, I wasn't trading by this point, and I had already made a very nice profit on the New Zealand US dollar. Okay, but maybe you took this pair. If you did, please let us know, guys. Okay, so yeah, really profitable day, guys. I hope you took some of the trade ideas. But let's look at today's potential trades now. Guys, I really hope you took some of the trades from Friday. Yeah, we had a really profitable day. And if you enjoyed the recap, then please smash that like button, guys. Yeah, it really helps support the channel. And also come join us, subscribe to the channel and smash that notification button. That way you'll receive an alert every single day, guys. Okay, so trades, potential trades for today, for Monday the 13th of June. We've got 3 potential trades today. The first one is this, guys. It is the pound against the US dollar. To be honest, guys, there was a lot of US dollar pairs I was looking at, but I've just focused on the ones that give us the best setups and weren't, you know, hitting into any support or resistance. Okay, so yeah, the first one is this, the pound against the US dollar. And we are looking to short this market. So price was in a downtrend, okay, lower lows, lower highs, lower lows. This area never broke, okay. Like a lot of the US dollar pairs, this last high held, okay. So for me, we were still in a downtrend, but then we had all this activity here, yeah, because price was trying to push up, come back down, push up, but eventually it broke, all right. And we had this very bearish candle. Okay, so for all of these reasons, I'm just trying to short this market. Okay, and all we want to do is just take price back down to this blue line here, guys. Okay, at 2263. Let's look at H1 for execution. So in an ideal world, guys, price will come back up to this grey zone. Okay, come back up to this grey zone. If it does, it offers us excellent value. Okay, we then see a bearish candlestick pattern. That is always our trigger to enter. This is very important. We then enter the trade, okay, and then we can take price back down to these last lows here, close 80% of the trade, and then leave 20% to run down to our higher time frame blue line. Okay, guys, so yeah, that could happen. The other thing that could happen, guys, because we have the daily candle is so bearish, yeah, price might only retrace to here. Yeah, it might correspond with the moving average 20 and this psychological level of 2400. Okay, so it could react here, but again, we want to see a bearish candlestick pattern form. Okay, we can then enter. Take 80% of the trade back down to the lows and then leave 20% to run. Okay, this is an option, guys, just because this grey zone is quite far away and the daily candle is so bearish. Okay, guys, so 2 potential ideas to short the pound US dollar. The next trade is this, the New Zealand dollar against the US dollar. We've been trading this since the other day. Okay, so and the same reasons apply, guys. Yeah, price was in a downtrend, or still is in a downtrend. So lower lows, lower highs, lower lows, lower highs, lower lows. And then again, guys, this last high, yeah, it didn't break. Yeah, this last high didn't break. So structurally, we are still in a downtrend. And for the last 2 days, we've had very bearish candles. Okay, which tells me we just want to take price back down to this blue line, which is this 6300 psychological level. Okay, guys, we're looking to short this pair as well. So US dollar strength has returned for now. Okay, let's look at H1 to see how we get in on this pair. So yeah, 2 grey zones with this one, guys. So price could retrace up into this grey zone. Okay, and then we want to see a bearish candlestick pattern form, always our trigger to enter. We enter the trade and then take price back down to these last lows where we close 80% of the trade and then we leave 20% to run. Okay, if that doesn't happen, guys, price could retrace all the way back up to this grey zone. Okay, this hasn't changed from last week. Okay, this is where we entered last week. Okay, but again, price could retrace up to this grey zone. We get a bearish candlestick pattern form, and then again we take price back down to the last H1 low. It could be here for all we know. Okay, but if not, yeah, the last H1 low. We close 80% of the trade, and then we leave 20% to run. Okay, so yeah, New Zealand dollar against the US dollar, we're still looking to short this pair. The final trade for today, guys, is this. This is the Canadian dollar against the Swiss franc. All right, and again, deja vu. We were trying to short this on Friday as well. So reasons for shorting this. So price was in an uptrend, higher highs, higher lows, higher highs, higher lows, higher highs. Then price comes shooting down, breaking these lows here. All right, so that tells me we now have lower lows and the structure of this market has changed. Okay, but price did come all the way back up to the last high before we had a reaction. Okay, but we did get a very strong reaction. Yeah, this very bearish engulfing candlestick pattern. Okay, so this tells me sellers are in control. And then Friday's daily candle also had this wick that rejected our grey zone, guys. All right, so yeah, buyers are not back in control. Sellers still have control of this market, which is still structurally in a downtrend. Okay, so we're just trying to take price back down to this blue line at 7663. And to be honest, guys, you could even leave some to run down to these last lows here. Okay, but yeah, looking to short this pair. Let's look at H1 for execution. So I slightly adjusted the grey zone, guys, just made it a little bit smaller. But what we want to see is price come back up into this grey zone. Okay, yeah, and maybe test these areas here where price reacted at. Okay, so price comes back up, reacts at these last H1 highs. We get a bearish candlestick pattern form. We enter the trade. We can then take price back down to these last H1 lows, close 80% of the trade, and then leave 20% to run down to our higher time frame target. All right, guys, yeah, so Canadian dollar against the Swiss franc, we're looking to short this pair. Right, guys, so they're the 3 trade ideas for today. Let's take a look at the news now. Guys, if you're enjoying this daily morning analysis and would like to receive it every single day, Monday to Friday, then please subscribe to the channel and smash the notification button. That way you'll receive an alert every single day, guys. Okay, so news for Monday, the 13th of June. So Australia is on holiday, as you can see, for the Queen's birthday. Happy birthday, Mum. Yeah, have a lovely day. Okay, and then if we carry on down, the first news that we're interested in is at 7 o'clock London GMT. We've got lots of UK news, yeah? We've got GDP, we've got manufacturing production, and we've got more GDP. So lots of figures coming out at 7 o'clock for the British pound, guys, all right? So must be aware of all of this news. That could really move the pound, okay? Especially if the news that's released is better or worse than expected. All right, guys, and if we carry on down, there is no other news that we're interested in today, guys. All right, so just that pound news in the morning. Okay, guys, so yeah, I hope you've enjoyed the vid. If you have, please subscribe, like, and share. I hope you have a fantastic start to the week, fantastic trading day, and I will see you tomorrow, guys.